Welcome back to this YouTube channel, everyone. We'll be going over our weekly fundamental outlook for both the US dollar and the euro dollar. Now, if you already haven't subscribed, definitely do. Now, you guys know I mostly trade Euro USD. Even if you don't trade the pair, it's still worth watching because we go over the US dollar sentiment and the US economy. And for a lot of you, that's still going to affect your trading as the US dollar has a lot of impact on the markets, which is why Powell moves the markets. All right, so first off, I want to mention this week wasn't a lot of big hitting news, and a lot of stuff actually came out better than expected for the States. So we've seen the dollar have a lot of strength. So we'll talk a bit about that. The one thing I want to talk about is, let's go back a few weeks here. Maybe one more. So if we look at the JOLTS job openings and we look at the unemployment, it seems like the job openings are going down and unemployment's going down. Not this week, but not the December to January 6th week, but the current week we just had, unemployment's going down. And I was talking to a friend of mine about it, and we were just chatting about how 30% of Americans actually have two jobs. And when one person has two jobs, these job openings are going to go down. While unemployment is doing good and it's going down and the job openings are going down, it's not necessarily an accurate measurement of the economy on its own. So there's the unemployment, there's the interest rates, there's the manufacturing data, and obviously the big one's inflation right now. So these are kind of the main ones we're looking at in terms of how well the economy's doing. Now we're going to go to prime market terminal since they make our job pretty easy when it comes to fundamentals. And we're just going to do a overview of everything that happened, and how it impacts the US dollar and its pairs, and then basically everything that happened with the euro pairs. Now, while it wasn't a heavy-hitting news week, we got a lot of sentiment of what the board members of the FOMC are thinking. We got an overview of what the ECB board members are thinking, and it kind of gave us an outlook of what to expect, I guess. On a week like this week, that's all we can expect. And for those of you that don't know, and haven't followed us, you probably know I use Prime Market Terminal. In our link, there's a 20% off link if you guys want to try it out. It's honestly made my job with fundamentals a lot easier, especially when it comes to a lot of these speeches that I don't watch. They'll just kind of tell you what they said. Okay, so US dollar started off the week with strength, fueled by remarks of FOMC and ECB members discussing or discouraging aggressive rate cuts. So if you guys remember back in December, between Powell's meeting, a couple of the board members, by the end of December, basically the sentiment was, even mid-December, I should say, the sentiment was aggressive rate cuts all of 2024. Euro USD shot up because the market priced it in almost too much. And what happened with that is January rolled around and they're like, whoa, hold on. Maybe we're not going to be as aggressive as we thought. Because in December, the word was we're looking at 7 rate cuts this year from the US. Right now, the sentiment is it's going to be less than that. I've already heard board members say 3 rate cuts, 4 rate cuts, 5 rate cuts, but 6 and 7 numbers not flying around anymore, which is already telling us they're pushing back their timeline for rate cuts. Okay, so the other thing that we have right now is the growing tensions in the Middle East. So there's the whole Yemen thing going on. We got to keep an eye on that, and basically that's one of those things, depending on how involved the US could get, it could give us a short-term trend change, I guess you could say, a currency strength even. So we're going to keep monitoring that. That's a sentiment we got to keep an eye on. It's nothing we'll get off Forex Factor or anything. I will keep up with that. And if there's anything to update you guys, I will. Keep tuning in with us every Sunday. We'll be doing these. All right. So on Tuesday, this guy actually watched, and Waller is one of the FOMC board members. He basically said, so I watched him for like half hour or 40 minutes, and this sentence is about what you need to know. He sees no reason to cut rates. We can slowly calibrate the real rate cut down. Now, there's a big term floating around right now, which is a soft landing. Soft landing means they're going to avoid a recession. I personally don't know how I feel about this, because there's very mixed feelings about this. I don't think we have enough data. There's a lot of people that think we're going to avoid a recession. There's a lot of people that think a recession is going to happen. Right now, it's all hearsay. Until we actually have the data, which we get every month, nobody actually knows. The Fed itself is, I think, anticipating a soft landing. A lot of expert analysts and bank analysts are disagreeing. So this is something I'm just going to let play out. And as the data comes in, I'll keep you guys updated. So these are all our pro-dollar bullish arguments, I guess you'd say. U.S. retail sales for December are up. Industrial production is up. Falling mortgage rates. So essentially there's more homes getting built and sold. So this one's kind of a funny one, because it's not so much falling mortgage rates as much as the builders are actually getting involved, and they're participating in, hey, if you buy through us, we're going to be able to shave so much off the interest rates. I don't know how the back end deal looks with that, if the builder themselves have a deal with the bank where they eat some of the cost, or what happens. But anyway, the big builders that can afford it, they're making these lower rates happen to keep their houses moving, which is really good for the economy. So that's the big thing that's happening in the States with homes. Business inventories, nothing crazy. Building permits, a little bit higher than expected, nothing crazy. All right, so another FOMC board member, Bostic, called for cautiousness, and we should allow events to continue to unfold before beginning to process of normalizing policy. So that's another Fed member saying we just need to pump the brakes on the rate cuts. We need to just kind of chill out. So Empire State Manufacturing Index, Empire State's just New York. I don't really yes, it's the lowest since 2020. But it's one state. New York on its own doesn't run the whole US dollar or the economy. And since the inflation's gone way up and taxes have gone up, a lot of corporations have up and left New York. So this actually makes sense. I don't think it's anything to be too concerned about. Let's see, January, cooling job labor market. So this is essentially showing that the Fed's policies are working, which is good. Philly Fed Manufacturing Business Outlook. This is again showing the Fed's policies are working. So this is all in line. This is all in line with everything that's going on. So this is all good. All right. For the euro pairs, and euro, I caught one of Lagarde's speeches. I didn't catch the rest of them. That's why this is so great, because they'll actually watch 4 days worth of speeches and give you a paragraph of what happened. Whoops. At the beginning of the week, okay, we don't need any of that. So this is the part we need to look at. So Lagarde herself suggested that it's premature to anticipate aggressive interest rate cuts. Now the pound's got roughly the same sentiment, that they're not looking at rate cuts anytime soon. Lagarde even hinted that the rate cut might not occur until summer. Summer could mean June, July, August. Like, we don't know. So what this is telling us right now, so far what the news we have is the US, we're anticipating a rate cut anywhere from March to May. I would be more leaning towards April or May with the data we have right now, whereas Lagarde's talking about not till summer, and some of her board members are actually saying maybe not even this year, but we'll get to that. Bullish headline. Let's see. ECB chief economist fought against the rate cut and said easing the policy too quickly would be self-defeating. Let's see. German president, ECB member. So this is another guy again, basically saying it's too early for rate cuts and maybe we can wait for the summer break or whatever. So this is another guy now saying the earliest should be summer. The next guy here is telling us we should not bank on rate cuts at all for 2024. So what I'm hearing from the ECB board members is that they're expecting higher inflation longer. Now, if the US is expected to cut rates and Euro's not expected to cut rates as soon, this is a bullish sentiment for Euro USD overall. And I'm going to show you the certification of traders reports afters. Basically, it lines up with the way the institutions are positioning themselves on the futures. Let's see, Bank of France governor. Yeah, so again, same thing, too early. We should be patient and waiting for rate cuts. Let's see, in an interview, President Lagarde admitted that it's likely that the central bank would raise its interest rates in the summer. So this is again something we're going to have to wait for more data to release. All the same sentiment though, nothing against us basically looking at aggressive cuts anytime soon. Let's see, none of this stuff is really too big. Okay, something I do want to look at. For those of you that tuned in last week, you remember these long positions on Euro were at 460,000, 848 to be exact. This week, we've added almost 20,000 positions to the longs on the Euro futures, and we've added just under 1,000 on the US dollar futures. So in the grand scheme of things, this makes us even more bullish on Euro. So just to summarize, so far we are neutral / bullish. Now the reason we're neutral, and I'm going to get into that, is we're actually waiting for some heavier hitting news, such as the FOMC, the NFP at the end of the month. Next week on Thursday, we have the ECB. We'll go into that in a sec. Just want to see, I don't think, yeah, this is all stuff we went over in the other report. Canada's CPI is higher than expected. Again, nothing too crazy here. We're more concerned about what the US is doing. Everything else is not really going to apply to you unless you specifically trade those currency pairs. Australia is not going to move the US dollar by any means. But if you trade an Aussie pair, then it's important. So this is the stuff I was talking about. Geopolitical tensions heighten in the Middle East as the Houthi militants launched the missile against the U.S. vessel in the Red Sea. Iran claimed responsibility for a missile. So I haven't really kept up too much with it. I know the U.S. Did have some airstrikes and stuff in Yemen. Right now, it's too early to tell what's going to happen of that. So this could change our bias a bit, depending what happens. Bank of China, this is not really something we need to go over. ECB again against the rate cuts. And here we're back to the escalating tensions in the Middle East. Central banks resisting rate cut expectations. So nothing, this is definitely something to keep an eye on, but it's nothing too definitive yet. Again, we'll go over this every Sunday and make sure that if anything changed, we'll know. We talked about this. New York's manufacturing is the lowest it's been since 2020. Again, Waller talking that basically don't rush the cuts. The bonds are in correlation with Waller's comments. Yeah, this is all in line. Let's see. Yeah, this is again all the same sentiment. I'm just showing you guys different reports. So I get 2 weekly reports. I like to look at both of them because sometimes there's some stuff we missed. Let's see, higher for longer. It's pretty normal. For those of you that trade gold and oil, you're going to want to keep an eye on the Middle East stuff because that can significantly impact you guys. So I would keep a close eye on that. US dollar continue to stabilize. Bond yields, yeah, this is all the same. Tweeting, let's see. Yeah, so this is all pretty much in line with everything that we're expecting. There was the S&P 500 hit a record high. This was expected. We knew this was coming. Nothing crazy there. I don't believe we missed anything too crazy. Existing home sales are going down. This is showing the Fed's tightening policies are working. Less people are borrowing money, which is why the builders got involved in lowering rates. This is existing home sales, not new home sales, but either way, everything's down across the board due to the mortgage rates. So that's showing the Fed's policies working. What else is there? Canada, really not something to worry about unless you trade a CAD pair. Here it is. So, again, another Fed member. Basically, this guy said he doesn't want to cut till we hit that 2%. So I think he spoke in Davos this week. I didn't catch him. I think I only caught 2 speeches out of everything. Atlanta Fed president, we talked about him. He's another one that wants 2% before rate cuts. This guy, Goolsby. What? I imagine his sentiment's the same. When the unemployment rate go up, it tends to go up rapidly. We haven't had that yet. So again, they're looking for unemployment to increase, and that's all in line with companies are borrowing less money, they're spending less money, so they're laying people off. So you've seen some of the news. Facebook laid off heavy, Amazon laid off heavy, Google. A lot of the tech companies had some big layoffs. That is indeed the Fed's policies at work. The inflation, yeah, so nothing different there. Rig count, nothing to worry about unless you trade oil. So the fourth quarter GDP is supposed to come out next Thursday or Friday, I believe. We'll look at that in a sec. This is actually quite a bit lower than the previous quarter. So, this would again be if it comes out around this 2.4 as expected. I think last time we were at 4 point something. I'll pull up the numbers in a bit here. This is again showing the Fed's policies are working. So this is all in line with everything that's going on. Let's actually have a look here. So next week, we actually have quite a bit of news for the euro that's going to move some things, which is good. And there it is, advanced GDP. So we had 4.9 last time. This time the forecast is 2.0. Whoever our source is at PMT, their forecast is 2.4. What's investing.com? Just out of curiosity, I like to check different ones because Friday. Was it Friday? No, Thursday at 5:30. Okay, so Thursday at 5:30. Here it is. So they're also expecting 2%. Yeah, it's quite a bit lower than the last time. This is something to keep an eye on. Depending how this comes out, it could move us. For those of us that trade euro, this could move us. However, the highest probability here is a rate pause. I don't see her hiking or anything. Bank of Canada interest rate decision. Again, if you trade the CAD, it might affect you. There was some talk about possibly raising due to higher inflation, but I don't know if it was high enough to do that. The last thing I wanted to show you guys was, so this is the last week of the month is when I expect things to move. Not the federal funds rate, because I expect that to stay the same. But when Powell speaks, I believe this is where the market could start moving. He's going to tell us basically all the data combined and how the Fed feels about it, how the board members basically voted on it. So they obviously all take a vote, all the board members we were just reading, and Powell delivers the message that the whole board decided. So this will be probably the big one we're all waiting for. So while this is likely a pause, the federal funds rate, the press conference will be big, and the next 2 days we get NFP at the same time. So I really think this will be the week that gets the market moving. Hopefully that's the case. If it wants to move before that, that's fine. So that's about all I have for our fundamental review this week, guys. Again, if you don't like looking at this stuff, feel free to tune in every Sunday. We'll do a fundamental overview. Technicals are used to get in. Fundamentals are used to actually determine the true trend and sentiment. Banks hire market analysts. They don't hire technical analysts alone. So there's a reason for that. If we can combine the technicals and the fundamentals 50-50, that's when we can have the highest probability moves. So that's the reason I personally look at this. So yeah, guys, thanks for tuning in. I appreciate you guys, and I will see you in the next week's video.